Most people think the stock market is controlled by some mysterious group behind closed doors. But the truth is far more interesting. So today, we're breaking down the question almost everyone asks at some point. Who actually decides stock market prices? Here's the reality most new investors never hear. No single person decides anything. Not Wall Street. Not CEOs. Not hedge funds. Not even governments. Stock prices move for one simple reason. Millions of buyers and sellers fighting over what they think a company is worth. Every second, investors place buy orders and sell orders. When more people want to buy a stock than sell it, demand pushes the price up. When more people want to sell than buy, supply drags the price down. It's a constant tug of war happening in real time. But here's the twist. Not all buyers and sellers are created equal. Retail traders, people like you and me, do move the market, but only on a small scale. The real power players are institutions. Hedge funds, pension funds, insurance companies, mutual funds, sovereign wealth funds. When they move billions at once, the market reacts instantly. Then there are market makers, firms like Citadel and Virtu, whose job is to match buy and sell orders. They don't control prices, but by setting bid and ask levels, they influence the flow of trading. High-frequency traders do something similar, reacting in microseconds to price shifts long before a human ever sees them. But it doesn't stop there. Stock prices also move on expectations, not just numbers. Earnings reports, guidance, layoffs, CEO comments, government policies, inflation data, interest rate announcements. They all affect how investors feel about the future. And since the stock market is basically a giant prediction machine, prices react to emotion as much as logic. One tweet from Elon Musk? A surprise interest rate cut? A war, a pandemic, a new technology breakthrough? A single headline can shift billions of dollars in minutes. So who decides stock prices? It's not a person or a group. It's the entire world reacting at once. Millions of decisions from millions of minds, all colliding in real time. Here's the big insight. The market doesn't care what a stock should be worth. All that matters is what people are willing to pay for it right now. Value is opinion. Price is action. And the greatest investors aren't the ones who predict the market. They're the ones who understand human behavior. Because at the end of the day, the stock market isn't a math machine. It's a psychology machine. If you found this breakdown helpful, hit that like button and subscribe for more financial deep dives that actually make sense. The market isn't a mystery. You just need someone to explain it the right way.